Hey you guys, I'm going to go over debits and credits and go through a worksheet and just kind of show you step by step the thought process behind it. You won't take all of these steps. Eventually, you'll just get to where you go, oh, that's cash and it's increasing. Okay, that's a debit. But until you get the hang of it, it's really useful to go through these steps. So I do have another debit and credit video where I explain why, what it means, that kind of thing. And this is just going to be more the practice side of things. So I'm going to switch over to my document camera. Okay, so we have 11 transactions here. First of all, you should know by now the dealer chart. And this is nothing specific or exact. It's just to help you remember that these three accounts, dividends, expenses, and assets, all increase with an entry on the left. And hopefully you know by now that the left side is a debit and the right side is a credit. And then these three accounts, liabilities, owner's equity, and revenue, increase with a credit. So you also need to know what I just said is that everything this chart represents how to increase an account. So debit doesn't mean plus or minus, negative or positive. It just means left, and credit just means right. So this chart represents increase. If you need to decrease one of these accounts, then you simply do the opposite of where it lands on the chart. So for example, if you need to decrease an asset, we're going to make a credit entry. If you need to decrease a revenue, we would make a debit entry. So I'm just going to go through and work through these 11 transactions. The first one says the company, remember we're always looking at it from the company's point of view, not the customer, not the owner, but the company issues common stock in exchange for cash. So my little tip, it doesn't work always, but it works most of the time. If you can't think of your account names, ask the question from the company's point of view. What did we give? What did we get? So in this case, we got some cash by giving common stock. So those are our account names. Then you go to the dealer chart, and these are the 6 categories of accounts. Those are the only 6 categories you'll ever incur. So you say, okay, what is cash? And sometimes for students in the beginning, they have a hard time thinking of these two names like stock and cash. So it might help you to just run through your dealer chart and go, gosh, was an asset affected? Was an expense affected? And that might jog your memory and help you think of stock and cash. So you go, okay, cash is which type of account? Well, it's an asset. So you don't write the category down for account name. You write the actual account name, cash, and we say it's an asset. And then you ask yourself, did it increase or decrease? And sometimes it kind of makes more sense in the problem if you say, do we have more or less of this thing now? So we have more cash, the company does, or the cash increased. So do we do a debit or a credit? Well, look to your chart. Assets are on the left. Since this chart represents increases, we're going to make a left entry or a debit entry. And DR, of course, is just the abbreviation for that. The second one is common stock. Common stock falls under which of these 6 categories? Hopefully you said under the owner's equity. Of course, in a corporation, we call that stockholders' equity. Is it increasing or decreasing? Or has the company issued more or less stock now? They've issued more. So our common stock increases. You look to the dealer chart and you say, oh, this time that account is on the right side. So this time an increase is going to be with a credit. So notice how both of these accounts increased, but one increase happened with a debit and one with a credit. And I just now see that I'm off a line. Sorry about that. I started up on the wrong line. Cash, of course, is a debit and common stock is a credit. Okay, let's move on to number 2. It says the company purchased business supplies on account. What did the company get? What did they give? They got supplies by giving what? Anytime you see those words on account, you know that cash did not happen. No cash was spent or received. They got the supplies, but they didn't pay for them yet. They bought them on account. So what was given was a promise to pay for them later, which is a liability. And in this case, we'll call it an accounts payable. So supplies is an asset. Our supplies increased. We got more. We look up here, we find assets. Since it's on the left and we are increasing, then we do exactly what the chart says and make a left entry. Then we have accounts payable. Since it's something we owe to someone, that makes it a liability. Our liabilities are increasing. We now owe more than we owed before. We look to the dealer chart. The liability is there on the right. They are increasing. So we will make a right entry or a credit entry. Number 3, pay for legal services for the current month. So when you see the words pay, paid, paying, then you know cash happened. Remember I said number 2, on account, we know cash didn't happen. But we see pay here. So we know that's how you pay somebody. You spend some cash. So that's one of our accounts. Cash must have gone down here. Legal services for the current month. So that's an expense that we've used up this month. So my 2 accounts are legal expenses and cash. I'm going to do legal expenses first, and that's just what I'll call them, legal expense. Which account type is that? Can you look at the 6 and tell me? Hopefully you said expense, no trick there. Here's the thing that's counterintuitive to some students. To students, and really people in general, I'm sure, expense has a negative connotation because we think, oh, like my rent expense, my electricity expense, that's usually negative because I'm paying it. But in this case, I'm not asking about the cash itself. I'm asking about the expense. So this is one of the ones where I say maybe more or less, using those words make more sense. Does the company have more expenses now or less? And they have more. Their expenses themselves have increased. So I picture kind of a basket of bills, and every time I get a bill in the mail, that basket is increasing, increasing, increasing. So our legal expense increased. We look up to the dealer chart, expenses on the left, and that's how we increase things. So that's going to be a debit. Our cash is an asset, but now we get to our first account that's actually decreasing because we paid. So we say decreasing. We look to the dealer chart. There's assets on the left, but remember this chart represents how to increase accounts. If we have a decrease, we need to do the opposite of what's on the chart. So our cash this time is going to be a credit. I'm sorry if you see my dog's nose popping in the video. It's because she's trying to eat my pen here. Stop it, Willow. Okay, I'll do 2 more and then you've got the answers. Yep, there's my dog's face. So sorry. Get down, Willow, unless you're going to do debits and credits. Number 4, provide services to customers on account. So from the company's point of view, what did we get? What did we give? Well, when you see these words, provide services, the company's doing what it's in business to do. Whether it's mow lawns if you're a landscaping company, design websites if you're a website company. But what that means is that the company has earned revenue. Whether or not the company got any money, got paid right now, is irrelevant. All we're looking for to record revenue is, did they do the work? Did they provide goods or services? And so in this case, they did. So we know this account's going to be revenue. That's what we gave. What did we get? Well, look, here we've got these same words again, on account. So it either means we owe somebody or somebody owes us. And in this case, since we, the company, did the work, then this on account means someone owes us money. So that's not going to be an accounts payable like we had before. This time it's going to be an accounts receivable because we'll be receiving money later. So our 2 accounts are revenue and accounts receivable. I'll abbreviate this time, AR for accounts receivable. That's an asset. It increases because people owe us more money now. We have more receivables than we had before. To increase an asset, we debit it. And then we have, I don't know what kind of revenue, you know, if we knew what kind of company this was, we would call it a certain thing, landscaping revenue or what have you, but we don't know the type, so I can't really put a description there. The type of account that this is out of these 6 is revenue. Their revenue increased. They have more revenue now than they had before. And since revenue falls on the right side of the chart, that means that's going to be a credit. Okay. Next one. Pay the employee salaries for the current month. Pay. That means our cash went down. Salaries this month, that's our expense. So we have a salaries expense. I'm going a little faster here, but you can always stop the video and think through it yourself. Watching this video is just to teach you the first time. The way that you're really going to get this and get good at it and not forget it is to practice it yourself without watching this video and struggle through it. Even if you don't know, go ahead and guess and try to talk through it and see where that gets you. Okay, so salary expense is an expense account, and that is increasing, so it's a debit. And then our cash is an asset that's decreasing, and that's a credit. Okay, you have this chart uploaded blank, and you have this worksheet uploaded with all the answers. Again, what I strongly recommend, this is seriously the best thing you can do to help you the rest of the semester, is to print out a blank one, not with the answers sitting next to you. Don't look at it and go, oh yeah, that makes sense. Do not look at answers at all and go all the way through all 11 of these and see if you can get them right and keep working through it. Notice I've got the balance sheet equation here at the top to help you hopefully make sense of things. Like when cash or assets increase, why are they debits? Well, it's because they're over here on the right. When revenue increases, why is it a credit? Oh, because it's over here. I just said right and cash. Well, I circled it on the left because it's over here on the left. Revenue increases with a credit because it's over here on the right. So if that helps you while you're doing this, refer to this balance sheet equation and look at it and go, oh yeah, that makes sense. That's why that's on the left and that's why this is on the right, and that kind of thing. And then double check yourself against that chart that I have linked there for you with the answers on it. And just keep reworking this as many times as you need to. And this is going to be really useful to you for the whole rest of the semester.